All right, hey everybody, good afternoon, and welcome to the free market update here for tomorrow, Turnaround Tuesday. I don't know. Today was kind of confusing in the markets a little bit. We started off this morning looking for a trade higher off of the bell into about approximately 2057 in the S&P, and we made it up to 56.5, and that was fun. But then we kind of had a floor, a line in the sand down at 2040 and traded below that. And so that's not so spectacularly wonderful given the fact that I'm trying to be bullish, I believe, this week, at least historically, into the expiration. We were bearish last week, and for the reasons discussed last week, and that ended up working out okay. In fact, the week was honestly very, very difficult, very choppy, but yet at the end of the week, although it was very hard to actually, maintain positions and be a participant, at the end of the day, it ended up trading the levels that we were looking for. Starting off this week, I have to tell you, there's a couple things that bother me. One, last significant range candle, such as the one here from last Thursday, which actually made the low that we were looking for down here. Call that a benchmark candle. Some people do at least. And the way that the trade is rejecting or there's an inability to hold like the half back, the 50% retracement of a candle such as that, like the benchmark candle, is not wonderfully bullish. Additionally, the fact that we're leaving these wicks on the top of these last two sessions, that is Friday and today, again, not so terribly bullish. Difficult trade today, to be honest. I mean, really, we've got retracements back from some pretty significant levels up here at 2072 back into the 21 period exponential moving average, which at the end of the day is not at all a violation of the ensuing trend, which is obviously up and not down at this point. In fact, there's a nice little W bottom down here you can kind of make out here. And so right now we've got a nice leg higher from the 1800s into this 2050 area. So that's good. We were looking for a retracement last week, got it. Looking for a bid this week, which just is a historical thing. Break into last week and then bid, rally into the end of this week for the expiration. It remains to be seen, but I'll tell you, I mean, here's what just absolutely, in my book, absolutely has to happen, and no ifs, ands, or buts about this. We have to hold Thursday's low at 26, and a violation of that is, in my book, not good for the bulls and likely yields a retracement back at a minimum back to like 2020, probably literally in the 2008 area. And that's not what I want to see. It's not what I'm looking for. It doesn't mean it can't happen, but it's just not really in my path, so to speak. I'll have to do some adjusting if that's the case. All in all, Mr. Market just does what it's got to do to confuse most of the people most of the time, and sometimes this is exactly what we have to put up with. Last week we had what some of us in the simpler trading group would call corrective style trade, which is very, very difficult trade. And last week was difficult. Right now, I'm still trying to give this thing a very slight benefit of the doubt, given the fact that it traded through my quote line in the sand at 2040, which is right in here. Traded down to 35 today. And it is just not permissible simply to trade back below Thursday's low without looking for a much healthier retracement than what I was looking for, and that would be down into the area, not exactly, but the area of which 2000. That is not my main line of thinking, but certainly can happen, and I have to be prepared for that given the way the trade went out today. Prefer tomorrow, and this is what happened last night. The bid came in on the European session last night. Go look at the timestamps of where the pivot low came in last night. I'd very much like to see that happen again tonight, to hold these lows overnight tonight, pivot at the European cash open during the middle of the night, trade higher into the morning tomorrow, and do some turnaround Tuesday kind of trade tomorrow, which would be In a perfect world, it's going to be to the upside. So tomorrow's call at this point has got to be sideways to higher, with the primary, line of thinking being higher versus lower cautionary note, and that is below Thursday's low at 2026 in the S&P June futures contract. So hope this helps. I'm going to scoot on over to the premium video and go through all of the markets, and some of which are about this confusing, some not, and be back with you again for tomorrow night's update. Good night.